Hello and welcome everyone. I'm so glad that you all could join us today. So as you all are aware, we have these bi-weekly webinar series and our aim is always to give you real solutions to real problems. And we obviously understand the various challenges that business owners face, in today's times. There are operations which really slow you down. Sometimes you install some tech which doesn't really work right, and you really need some good insights and some right way, and that is what we aim to show with every webinar that we hold. So this is your time where you pause, you pick up something that you feel is genuinely useful, and definitely we are welcome to feedback, so you can drop in at the end of the session. Today's topic is definitely a very technical topic, and anybody who has been through a system change, for you, you all know how critical this topic is. So getting your opening balances right is something that is really essential for a smooth transition, especially because you're moving to a new platform, say like Odoo. So your opening balances need to be clean. Everything has to fall in place. Otherwise, it just lands up with you getting into a lot of errors, and you're ending up reconciling things. So this is the reason that we chose this topic, because it's definitely the backbone to a clean and successful go live. And to take us through this session today, we have someone who's seen it all. A lot of implementations, a lot of transitions delivered really perfectly, and with a lot of smart strategies in place. So please welcome me we're welcoming Yashas on board. And he is our senior functional expert at Pragmatic TechSoft. He brings a lot of insights when it comes to functional processes, and he has a knack to simplify complex problems in very simple ways. So over to you, Yashas. We're looking forward to lots of insights today.
Thank you, Arva. Very good evening, everyone. Everyone present in the webinar. So I'm Yashas, and here we are presenting you with a new way. I mean, this is basically what are the right methods to go onboard a new Odoo database, especially with respect to, as Arva rightly mentioned, how important is putting up opening balances in the most right method is what we are going to look into. So straight away, this webinar will be most applicable for anybody who is either planning to migrate from one ERP tool to another ERP tool. For example, it could be SAP or Microsoft, or it could be Tally or any other Sage or any other ERP tool to Odoo, or from an older version of Odoo. For example, Odoo has its own versions. I mean, every year they keep changing they keep upgrading the versions. And certain times the customer or the client or as an enterprise, you would have been in a place where, for example, I'm in Odoo version 14. Now, the recent version is going with Odoo is version 18. And in the next 4 months, version 19 is going to come up. So I want to change from version 14 to version 18, but I want to also restart everything. That is, certain new customizations I have put out. My data is too much in the old database. I want to move afresh into a new database altogether. So this is the right one which you have to see and you have to learn. Also, you want to have a clean transition without carrying old data, because it's a very huge data that you have, and too many transactions, and you want to keep it as a legacy data in one place with just one user and for probably one access for the auditor to quickly check. And you want to freshly start your transition or the upgradation into a new database altogether, where you put out new features of Odoo, or you put out new customizations, you make changes in the processes, and you want to adapt to a new system. So that is where this webinar is going to be very, very important. So if any of this is your problem, or if you are looking forward to have information with these kind of scenarios, you have come to the right platform. And today we are going to see how it's done step by step. So the agenda for today is what we are going to see in the next 20-25 minutes, or in the next half an hour, is first we are going to answer what is the importance of opening balances. And then we are going to quickly see what are the checklists that we need to have before I even start, or before I plan for a migration or a new system change. What are all the things that I need to put out, exclusively speaking of Odoo? And then what are the best time frames that we can transition, that we can put out migrate from one legacy system to the new system, and also what could be the best practices. And then comes with these best practices, we'll see how do we prepare the data. And with this preparation of data, then comes something called as suspense account concept, which I'll explain you with an example. And then we are going to see, with all these things, we are going to see one example, real-time scenario. How are we going to do this? We are going to end the webinar by looking into what are the mistakes that we can avoid and what are we taking away from this whole webinar. So that's going to be the overall agenda. So it's going to be most of the, this topic is exclusively more technical aspect or more into theoretical aspect. So I'll try to make it as simpler as possible. But if you have any questions, please feel free to ask in the end. So let's start off. The very first thing is you might ask, why can't I start doing transactions in a new database altogether? Why do I really need opening balances? Like, for example, as I said, if you are already using a particular database, it could be of any ERP or even it could be Odoo as well. By the end of the time, that is, for example, let us imagine we are in the end of the month of June, nearing the end of the month of June. Let us imagine that we want to transit from one database or one ERP tool to another ERP tool. So we already have transactions. We already have something called as balances in an old system. When I say balances, it is when we say about all the transactional balances. When I say transactional balances, it is about my day-to-day transactions, expenses, incomes, and everything. It is also about my receivables and payables, which is nothing but the that is payables, AR and AP side, and also about the assets. That is, it could be fixed assets or current assets. So overall, everything becomes part of the finances and accounting. So we do day-to-day transactions, which becomes part of my balance. That is basically the closing balances at any point of time, and that we need to carry. We don't take all the transactions as it is into the new system, but we take only the reconciled balances finally to start with the new system. So that is why when we are moving from one system to another system or one tool to another tool, copying these or transiting this or moving these opening balances or the closing balances from the previous system becomes the opening balances in the new system. So how, that becomes very, very crucial for us. Else, we can start with new transactions altogether, but we don't have anything. We will not have any knowledge about what was my receivables, what was my payables, how much inventory did I have, what was the ledger balances, what was the bank balance, what was the cash balance when I go into a new system. So we'll literally be completely blinded with no information at all. We can start the transactions in the new system, but with no historical data at all. So because of which opening balances play a very crucial part. And also, when we go to the new system, it is mandatory, in fact, in almost all the countries across the globe, the regulatory compliances are in such a way that we have to show that these were the closing balances from the legacy system, and this was taken as it is without any changes, and we reconciled it very clearly. And this was also carried to the new system for all the audits and other purposes. And as I said, to prevent the go-live disruptions, because once we make the transactions, we start the transactions and we want to say, okay, where is my inventory? I don't have it because I have not carried the opening balances. So to make sure to address all these things, it's a very mandatory thing for us to clean the data from the legacy system, not transaction-wise, but the closing balances, reconcile everything, put it in a proper format, move it to a new system, and then start the new system. So that's why opening balances plays a very important role. Now, what are the standard checklist or the what needs to be prepared, or what are the major things that I need to keep in ready so that I have to move from one system to another system or one version of Odoo to another version of Odoo? When I say another version of Odoo, it's not about upgradation. It is about migration. That is, I'm going to stop using the previous database. I create a new database and then go ahead with it, because Odoo also provides the upgradation where I can simply use the same database, upgrade from one version to another version. This whole webinar is not applicable in that scenario. It is only with completely shutting down the previous database or the previous system, moving to the new system. Could be Odoo to Odoo, or from any other tool to Odoo. So the first thing that we're going to see as the checklist is the general ledger balances. So first we need to make sure, for example, all these things, whatever I mentioned over here, let us assume that we are going to go live either on April 1st or probably this month end itself, that is on July 1st. Could be any other month also. We'll also discuss about what would be the best time for this. But let's assume that, for an example, let's take it up this month end itself. So by this month end, what are all my general ledger balances after reconciliation? That is one of the most important part. Second is the open receivables and payables. When we say open receivables and payables, I might have, for a single customer, I might also have an invoice, I might also have a credit note, I might also have some advance payments, I might also have some regular payments. We need to make sure everything is reconciled, and then we will be left out with either I owe to the customer or customer owes me. Could be anyway. Same with the vendor also. That we call it as open receivables and payables. that we need to make sure it is reconciled, the balances are reconciled, and it is ready to move from older system to the new system. Then comes the banks. On a particular date where we are deciding to transit from old system to new system, we need to make sure all our bank statements or the banking transactions are reconciled, so that until and unless any urgent transactions which were done on the last moment, if it is posted in some, as I said, we have the control accounts, which we call it. Except for that, all other balances, we expect the bank balances or anyway, cash balances do not go for reconciliation, but bank balances go for reconciliation with the bank statements and other stuff. So we expect it to be reconciled as well. And most importantly is the inventory, especially for those companies or those enterprises which opt for inventory, I mean, carrying the inventory balances also, because there are service industries where the actual inventory, physical inventory might not be applicable. This is for the inventory valuation is for those entities where they have physical stock which has to be moved, because it is part of my balance sheet also, and also part of my trial balance. So the physical inventory has to be made sure we take a correct stock, so that no inventory is left out or no inventory is unaccounted. So everything has to be put out, like what is the product, how much quantities are available in which location, if it has a batch number or lot number. With all these things, if you have multiple warehouses or multiple branches, even the costing also needs to be taken care of. Anyway, we'll discuss each one of these aspects in detail. But overall, what we need is the general ledger balances, open receivables and payables, bank accounts and bank reconciliations, and inventory valuation. Going further is, I was mentioning about the when to transition question. That is, what is the ideal time? Usually, I mean, most of the accountants especially prefer the year end, that is the fiscal year end. For example, if you take India as an example, we have the accounting period, that is the fiscal period from April 1st to March 31st. That would be the ideal time, because anyway, the balances will be closed on March 31st. If not ideally on March 31st itself, they'll take up new financial quarter or the new fiscal year mandatorily. There might be some one or two expenses which will be put out in the previous year, I mean, backdated and all those things, but at least inventory and other transactions will be strictly stopped. Taxation, everything will be strictly stopped, and they're going to take the new year ahead. So that is the ideal period, but it is not mandatory that we always have to wait for the fiscal year itself to end. We can do it also on a month end, preferably on a quarter end, because most of the companies will be submitting their balances and everything to the governments also, and also to the auditors for internal auditing, and also for the, if it is a public listing company, we have to declare the balance sheets, and there are a lot of statutory rules as well. So it is preferable. The first priority would be the year end, fiscal year end, if not a quarter end. If not, I would suggest a month end. That is basically 1 month. I mean, starting off if it is a very small entity where balances are not so huge and the transactions are of not huge complex and this thing, we can do it on a month end also. So as I said, why mid-year transactions are complex or in between a month or something like that? Most importantly for my accountants, especially because this activity resolves more around the accounting process. Where the accountant has to reconcile everything on a mid-year or a mid-month or a mid-week, if it is mandatory. That becomes a very difficult task for them, because they need to clearly map a particular date. They might have to probably stop all the operations, reconcile everything, and then they have to arrive at the closing balances. In a mid of a month or in a mid of the week is very, very challenging, and it is not suggested as well. That's the reason what we say it is to be done at the end of the month, preferably end of the quarter, or the best scenario, end of the year. As I said, reason being, it is difficult to maintain the audit trials, and also very high risk in the mid of the month, because we might have to literally stop the operations and all the other aspects. And how much time it might take? This question completely depends on the size of the organization and the size of the data, in fact. Large organizations with like 40,000, 50,000 products available, I'm also speaking from the inventory point of view, and also a good number of transactions, putting up the closing balance and taking up the opening balance will take anywhere between 1 to 2 weeks. Can go up to 3 to 4 weeks as well. Can happen even in a couple of days also. But it is not a single day activity where we can quickly switch from one to another. It definitely requires good amount of preparation, good amount of practice, and then we have to put it up. So taking all these things into consideration, let's move ahead with the webinar. So what are the best practices? So one thing is to do this in, because it could be from Odoo to Odoo, or it could be from one legacy system to the new legacy system. We need to make sure that, a couple of things are in place. One is, because we are choosing that the destination platform is Odoo, and Odoo can take up anything with respect to, the data can be imported into Odoo through Excels or CSV sheets. So what we say is, make sure all the spreadsheets are ready. It could be for general ledgers, or it could be with inventory, it could be with AR, AP. AR and AP means accounts receivable and accounts payable, or it could be with fixed assets and everything. Make sure all are import ready formats. First is, you have to make sure all the data, that is the Excel sheets that you are populating from the old legacy system or from the old Odoo system, should be in an import ready format into the new system. That is one. Second, most importantly, make sure all the reconciliations are done. As I said, the ledger reconciliations, and most importantly, banks, AR, AP, and inventory. And the next thing is, make sure as I said, the import ready format should be ready. And also, please keep a proper documentation of these were the balances. These are APs, these are AR, these are inventory, these are fixed assets, and all these aspects. You need to maintain a track record in the sense that documentation probably in such a way that whatever you export out of Odoo as an Excel should reflect the closing balances in the previous system as well. It could be from any other tool also. Somewhere, there needs to be a very clear document that the closing balances represents the Excels. Those Excels are going as opening balances into the new system. So that is one thing. And one of the most important aspect is, we cannot straight away take it up and put it into the new system, because simply giving you an example, the customer names should be matching, the product name should be matching, the ledger names should be clearly mapped in the new system. So because of all these complexities, we suggest in Odoo, because we are, as I said, we have already decided that the destination platform is Odoo. Please do have a staging instance, move everything, check once, that is with trial entries and the putting up the opening balances. Closing balances in the previous system should match the opening balances in the new Odoo system. Only if it matches, you can do it like forking the live database into staging and then doing this activity, or you might do it twice. That is, you do once in staging, you then erase it, and then you do it in production. Both can be done. So it depends on what are the best methods and how many people that you have as a resource to which methods that you choose. So these are all the things that we suggest to do while uploading the opening balances. Next is, as I said, to give you an example now, let's take up one example. Let us imagine that we have an enterprise. That is, we have a manufacturing entity. A small entity, not a huge one, where we manufacture a couple of products. So we have thought for the first quarter to move from one system to another system. Let us imagine it could be ERP tool X, and now we are moving to Odoo ERP with version 18 or whatever the new version is. So we have decided that on 30th of June, we are going to cut off. And on 1st of July, ideally, we have to move on to the new system. So what are the things that needs to be done? On 30th of June, first, ideally, because I cannot run the operations continuously and keep consuming the raw materials and producing the goods and say that, okay, on 30th of June, this was my stock. Unless I stop it, I will not know what was my actual raw material stock, or how much is my WIP stock, or how much is my finished goods stock. So what we say is, we pause all the operations at least for half a day, depending on the size of the organization and depending on the size of the enterprise. We take the stock of all the inventory, put it in proper Excels, and the auditor, the internal auditor or the internal accountant will sign it saying that, okay, this physical quantity matches my books quantity also, with valuation. That is the most important part. And on the other side, with all the financial transactions, the accountant has to make sure all the balances are reconciled. That is payables, receivables, and bank balances. Especially with respect to payables and receivables, as I said, a single vendor cannot have both an invoice and a credit note at the same time without reconciliation. So it has to be reconciled. Either there should be a debit balance, or there can be a credit balance. Put together also there can be, but ideally, as I said, because if I have a debit balance also and if I have a credit balance also, it is suggested to have a reconciliation so that we don't import both of them. Ideally, we reconcile in the old system itself, and we only carry one of the balances. For example, if I have 100,000 debit and at the same time 50,000 credit for the same customer, it is suggested to reconcile both and carry only the debit balance of 50,000 to the new system rather than carrying both, so that it reduces the confusions and also it gives very good clarity. And anyway, it would be reconciled in the future stage also. Let us reconcile in the old books itself. So these are all the activities that we need to do. And on 1st July, we will upload it into the staging server or the production server, check it once thoroughly, and then we make the system live. That's how we are going to plan it. So this is how usually it will be planned. This is an ideal scenario, but in practical scenarios, 1st of July is impossible, to be very honest, because with my experience of more than 15 implementations, it will take, even though we decide, I mean, many a times we have decided to stop on 27th, and then we are going to take all the stocks and everything 28th, 27th and 28th, for example, no operations are going to be done. Everything is going to be shut because it's one-time activity for next 5-10 years. So the stocks will be taken up, the operations will be, I mean, all of the other accounting activities will be stopped. And on 20th, they start in, either they could start in the older system itself, but they're not going to reconcile anything because they want the transactions also, or they're going to record it manually so that we can start in the new system afresh. Both can be done. That's a different scenario altogether. So, and then we are going to prepare all the documents, and then we are going to upload, test it once thoroughly, and then we are going to make the live on first of the month or the 2nd of the month. Ideally, that's how it goes. So let's proceed ahead. As I said, we'll prepare the data now. I gave you an example. We are taking up, we are assuming that we are making live of a manufacturing entity, a small manufacturing entity with all the inventory, AR, AP, assets and everything in place. So we have to make sure all these data, the legacy data, is available in Excel or CSV formats. We have to make sure it is in an importable format. When I say importable formats, each one of the balances has its own mandatory fields. For example, if I go to general ledger, if I have to import it as a journal entry in Odoo, it needs to have a mandatory journal, it needs to have a date, it needs to have ledgers, either account codes or the account names itself. And mandatorily, it needs to have, each and every line should have a debit or a credit. Cannot have both. And then basically, I mean, for the best practices, I would always suggest use the account code, not the name, or even better, external IDs, especially in Odoo, because external IDs are the one which is very, very unique, or we call it as a primary key, which is generated by Odoo itself. We can also introduce the external IDs if we are importing for the first time, but it is always suggested to take up the external ID basis. And then, as I said, validate all the balances, make sure there are no errors, all the balances are reconciled. And also in the Excel, we make sure there are no duplicates, there are no blanks or anything as such. So these are some of the things, because the whole movement of data from one system to another system is ideally through Excels or CSV formats, because we are not moving transaction to transaction, but we are completing the reconciliation. We are moving only the balances from one system to another. Because people might ask, why can't we make some API integrations and stuff like that? Those could have been done if it's a transaction to transaction movement, but it is not. Here we are moving from one complete system, closing all the balances so far we had done for last 1 decade or 5 years, and then moving to another system, taking only the balances into the new system. So that's how it works. So let's take up an example. As I said, I was mentioning earlier also. So we have taken up a real-time example for this webinar. So let us imagine that we have a manufacturing company, as I mentioned earlier as well. We have presented the trial balance over here of the XYZ company. This is how ideally, I mean, for example, again, I'm mentioning, will be my trial balance. For example, I have my accounts receivable, my bank accounts, my fixed assets over there, my debts, I mean, basically my liabilities, everything will be over here. And retained earnings is nothing but, I have not put out income and expense over here, because I believe, I mean, I have assumed over here in this example that whatever my expenses and incomes were there, all were reconciled and as taken as retained earnings. You can also take up individually also. That is, you can bring the income balances and expense balances as it is. That is also equivalently good. It is not wrong. Ideally, certain times, I mean, if it is a year-end procedure, definitely we'll get the net income, I mean, net profit, which is or the complete balances, which will be in part of retained earnings. So that can also be done. So both the scenarios are valid. So the reason why I have marked a couple of things in yellow color is basically because those represent the account receivable, inventory, and payable. We cannot transfer the balances of account receivable as it is, or inventory as it is, or accounts payable as it is. What I mean by this, I cannot say I have a 30,000 balance in accounts receivable, which I'm moving from the previous system to the new system. Or I cannot say I have a 20,000 debit balance of inventory, which I'm moving from older system to new system. Why? If I get into the new system with this strategy, I will not know which product had how much quantities in which location. I will not know which customer owed me how much against which invoice. I will not know which vendor I owe how much of balances for which vendor or for which date or anything as such. Because of which, we will not import accounts receivable balance, inventory balance, and payable balance as it is. Rather, what we do, we are going to omit this. We are going to replace this with something called as a suspense account. Instead, what we are going to do, we are going to import the accounts receivable balance separately as credit notes and invoices. We are going to import inventory separately as individual product balances. We are going to import the payable separately as vendor bills and vendor debit notes, which we are going to see in the next stages. So, as I said, this is where the concept of suspense account comes into picture, where if I directly take it up, that is the inventory or the this thing that is accounts payable or accounts receivable, I cannot know the differences between what is a product or who is a customer. At the same time, if I omit it, my trial balance doesn't match. So for that purpose, what I do, instead of putting up the inventory and the accounts payable and the accounts receivable, I replace that with something called as a control ledger or the suspense account. We call it as a suspense account, can also be called as a temporary account. Ideally, the goal of this is first I import the general ledger, that is as a one journal entry, the entire trial balance will be imported with the suspense account in place, which is like a placeholder for AR, AP, and inventory. So there will be some balance in the this particular suspense account. And I also import inventory, I also import AR and AP separately as invoices, physical inventory, and also pay vendor bills. Once I do the import of AR, AP, and inventory, there will be a suspense account. Here in the general ledger also there will be a suspense account which gets knocked off. And ideally, once we make the system, once we upload the whole trial balance with all the other aspects, that is AR, AP, and inventory successfully, the balance of the suspense account will become zero. That's the ideal way. That's the ideal scenario. Usually, the moment once we have to start the transactions, the first thing that we are going to see is the opening balance account or the suspense account should be should have the balance as zero. As I said, the reason why we do this is because I need the trial balance to have the, I cannot put out the trial balance with respect to AR, AP, without AR, AP, and inventory. At the same time, I cannot do it because without that, the trial balance is unbalanced. So to hold the place of these ledgers, I'm going to use the suspense account. And also it becomes easy for my reconciliation as well, which we'll see later how it has to happen. So moving ahead, what we are going to do, what is the suspense account and how are we going to create it? Simple example over here, we can call it as, we can group it under current liabilities for an example. And we can put it up as, for the name example purpose, we call it usually as opening balance adjustment account. We can give a unique code also for this and we create it. Next thing, to do all these activities, we also need a journal. That is what we say is it's better to identify at any point of time what all did I do with respect to opening balance with a specific journal and a specific sequence. To help me do this, we are going to create a journal separately called as opening balance adjustment. And we are going to map it also with the account which we created previously, along with a separate sequence as well. You can see that OBTB means, in short forms, it's opening balance, trial balance. This is what we are going to do as the first step. Next, as I said, we are going to take, for example, I'm going to go 3 steps backward. If you take out the accounts receivable, inventory, and accounts payable, it's going to give me a debit balance of 25,000. I'm just putting up reconciling over there. And that's the reason I've added opening balance adjustment account for 25,000 that as a debit balance. I will import this as a general ledger entry. That is basically nothing but as a journal entry into Odoo as the first place. Now, this 25,000 debit balance should become zero automatically once I complete inventory, payables, and receivables. That's the ideal scenario, and that's what we are going to show you also. So this is how we are going to import it. We are going to do this as a general ledger import. You can see it over here. This is the Odoo importable format. I give a reference. I put out a date. For example, 1st August I have taken. Journal is opening balance adjustment. And these are the accounts. I can give the name, or I can take the account, or I can also take the external ID also. I give a label as well because I want to see on the journal items also, which was part of the journal, opening balance. And then we say whether it's going to be a debit or a credit, and we upload. You know the common rules that this has to be a balanced entry so that there is no debit or credit which is more than each other. Ideally, both of them should be equal. Once this is done, the open receivables and payables, let's get into that. Most importantly, as I said, you have some 100 different transactions of a particular customer or of a particular vendor. You cannot import everything as it is, even though all of the 100 are open. What we need to do, because each one of them has their own product lines, they'll have taxes, they'll have discounts, and as it is in the previous system. So what we need to do, each and every invoice of the previous system is going to be uploaded as each and every invoice into the new system, but with only one line without any product. Because if I add with the product, ideally it's going to take my sales account, and also it's going to take my tax account into the new system as part of opening balance, which ideally is not the case. What we need to do is each and every invoice will be taken forward into the new system if and only if it is open. When I say it is open, even after reconciliation, these invoices or these credit notes are open, saying that there are no more balances for me to reconcile against this customer or a vendor, and these are completely open for the customer to pay or for me to pay to the vendor, ideally. And as I said, the product should not be selected, only label with the suspense account, which anyway I'm going to show it to you. And ideally, we suggest you to create separate journals for AP, separate journal for AR, which I'm going to show you also. And most importantly, if there are any foreign currency transactions, once this is moved from previous system to the new system, make sure each and every transaction has to be posted individually with the date matching the currency table. That is very, very important, because else if you choose one date and if you post it, there are chances where an invoice and a bill in the same date can have two different currency exchange rates. And if you choose everything at once and just click post, it will take one of the entries will go wrong and your opening balance will never match. So because of which, especially in case of foreign currencies, please be careful. Make sure each and every transaction is checked with the currency exchange rate, and then we are going to post it. Going ahead, as I said, I would suggest to create one separate journal for opening balance sales, one separate journal for opening balance purchase, and this is how we suggest to go with the import format. You can see over here who is the customer, the invoice or bill date, what is the invoice reference. This is for your reference from previous invoices, previous system. What was the due date? What is the currency? Journal, I have specifically taken opening balance journal. You can see over here, there is no product, there is no tax, there is no discount. Leaving out everything, what was the total open balance from your previous system? That's going to be taken, because of which we are not going to take product. Instead, we are going to directly take up the account. You can also add label over here. That is also correct. And you're just going to put out one quantity and put out the lines. This total, you can see over here. And also the credit notes is going to follow the same. So the net receivable should be 30,000. What the reason why I put out the last part is this 30,000 net receivable. I'm going to go back to the previous couple of slides. Should match this particular receivable over here. You can see over here on the screen, account receivable matches 30,000 debit. So when I upload the 30,000 balance from the receivables, it should match my trial balance value. Same with payables also. You might have multiple vendors. You can put up the vendor bills as well. Again, the same thing, your purchase bills and the debit notes. Finally, net payable should match your balances. That's the most important part. So that your suspense account gets, you can see over here, every line over here, I'm not adding it to the customer balance, because I mean, anyway, customer will be, the moment I put out this particular invoice or a bill, for example, this is payable. The moment I post this in Odoo, what's going to happen? The vendor A, that is basically the payable account, will be credit, and the invoice line account will be debit. That is the opening balance adjustment account will be debit, and the vendor, I mean, whatever is there in the account payable ledger in the vendor masters, that will be credit. The opposite will be in the customer this thing. If I put out an invoice, basically over here, the account receivable ledger, which is mapped in the customer account, will be debit. My opening balance adjustment account will be credit. So finally, it should have the balances in such a way that it gets knocked off with respect to trial balance. Now, going to the bank statements over here, if it is direct bank, this thing without any additional ledgers, that is what I mean is, in Odoo, there is a feature, I mean, even in other ERPs also, there are features where, apart from the bank ledger, there will be additional ledgers called outgoing payments account and outgoing receipts account, which is like, for example, unless, especially with respect to those transactions which involves checks and those processes where they mandatorily ask for reconciling against a bank statement, we would not take up into the main bank balances. So what we suggest, if at all you have bank ledgers, I mean, definitely bank ledgers will be there. And if at all you are taking up with these bank statement reconciliations, until unless you are very sure about the bank balance, do not consider those. You can park it under the additional ledgers, as I said, which we are going to show it as well as the outstanding payments account, outstanding receipts account ledger. And once you import it into the new system, you can import the bank statement, because at the time of go live, your bank account is still not reflected, but you have already made the payment to your vendor, or your customer might have given you the bank reference saying that I've already made the payment. It might take some couple of days to reflect in your bank account. These transactions which are not yet reflected in your bank account shall be parked in the outstanding payments account or the outstanding receipts account. Carry as it is into the new system also. Once the actual bank statement comes, upload the bank statement, reconcile it so that it goes and falls into the bank account. That's how it has to be done. So next most important thing is the inventory balances, where, as I said, this is going to be affected, or this will come into place only for those entities who maintain inventory, physical stock. It is not applicable for service industries where they do not want to maintain the stock of any products. So over here, a couple of aspects is, most importantly, all the inventory has to be counted, and make sure even if one product is available in multiple places, all the product location wise, the quantity has to be put out, and all of them has to have the same cost. Because at the, if you observe that in Odoo, the costing is at a company level, or I can say it as a, if it's in a multi-company environment, each company will have its own costing. Each product same product being in multiple companies can have its own cost, but at least within the company, it is mandatory to have the same cost across all the locations. It cannot be like one location I have one cost, another location I can have another cost, because my total valuation will mismatch in that case, at least for the closing balances. So in such scenarios, we have to make sure the product cost is consistent. And also we need to make sure before we put out the, that is, we continue with the uploading, first, as part of the product masters, these costs, the consolidated cost is uploaded into the product masters. Only then we will have to upload the inventory balances, which I'll show you how. So basically, first is there is a location in Odoo called as inventory adjustment, which is part of virtual locations. Ideally, if you go to inventory masters and the settings, and if you open locations, this particular location is hidden. You have to remove the filter to get the virtual locations. And in the virtual locations, you can find this inventory adjustment. That is basically virtual locations inventory adjustment. The thing needs to be done. The control account or the suspense account, which I mentioned earlier, has to be mapped in these two places. That is the stock valuation incoming, stock valuation outgoing. Ideally not required for outgoing, but mandatorily required for incoming. And also, please make sure once the balances are uploaded, before you start the transactions, remove these two ledgers back. That is, make it empty, or you can choose whatever the other ledgers that you want to choose. Because if you do any, let us imagine that you completed the opening balance adjustments and then you forgot to remove these two ledgers from here. And later, 6 months down the line, you did a physical stock and you had to do an inventory adjustment. Because you hadn't removed the ledger over here, even if you do somewhere after go live, still the balance, the ledgers will be affected, will be opening balance adjustments account, which will be wrong. You will have to again fight for reconciliations. Rather than that, moment opening balances are uploaded and everything is set, and your internal auditors and the accountants give a good to go signal, you can remove these two ledgers so that the transactions go peacefully without any problems. Next is, most importantly, as I said, one is, you will upload it in the physical inventory, menu in the opening balances. The opening balances will be uploaded in the physical inventory tab. That will be in the inventory module, where ideally product external ID or product names can also be taken up, but I choose external ID, then the locations, then exact date what we want, and the counted quantity. Same product can be available in multiple locations, no problem, but cost needs to be maintained as one in the product masters. What happens over here is, the moment I upload this particular product into the physical inventory, that is the inventory adjustment, and I click apply over there, what Odoo does is, it takes the product valuation account from the product category, checks whether it is automated. That is one of the most important part. Please do make sure, because you're putting up inventory valuations, you want the inventory valuations and the accounting entries. Please make sure the product categories, the inventory valuation is automated. It shouldn't be manual. If it is manual, only the valuation entry will come, accounting entry will not come later. And even if you automate it later, it goes haphazard. So that's the reason what we suggest. I mean, once we upload this inventory balances, what Odoo does is it takes the inventory valuation account from the product category of the product, and then also it chooses the inventory adjustment account from the location, which is nothing but inventory adjustment location. And it will post the value where quantity will be picked from here and the cost will be picked from the product master. It will multiply and post the valuation and also this accounting entry as well. So that's how the whole process goes. And that's the reason we say that the cost is very important to be maintained in the product masters. And as I said, all the accounting entries will be validated, and the accounting entries along with the stock valuation entries will be populated once the inventory is validated. So this is how the complete opening balances will be uploaded. As I said, first is the general ledgers, nothing but a journal entry. Then is the AR and AP, and then we discussed about banks, and also we discussed about the inventory also. Now, what are the common mistakes to avoid? Most importantly, please don't have any unbalanced GL entries. I would suggest also with respect to AR and AP, you might say that, why can't I take up both for a single customer? Why can't I take both the invoice and a credit note, or for a vendor, both bill and a debit note? Can, but not suggested. Ideally, preferably reconcile it and then take only one of the balances. Incorrect suspense account, especially with respect to banks, where the outstanding payments account and outstanding receipts account, make sure it is taken care, very well taken care of, where it is clearly shows the bank ledger separately and also the outstanding payments and receipts account separately. When we are putting up the, as I said, especially with respect to invoices, credit notes, debit notes, and the bills, please don't take up any taxes in the invoices or any transactions. No taxes, no discounts, because it's the final end balance that we need to carry from one system to another system. And as I said, the reconciliation I'm highlighting again and again, because this is what makes my closing balance very clear. If my closing balances are clear, then my opening balance also will be clear. That's the reason we are highlighting on the reconciling. And key takeaways, as I said, I believe this whole webinar will be like a foundation for you guys for what needs to be done with opening balances, how and why should I use the suspense account, and why is it so much important that I have a clean data which needs to be carried from one system to another, and what are the measures that we need to take. That is, first do the test import in the staging and then do it in the production. So these are the key takeaways which I believe was the output of this webinar. So if you have any questions, you can ask me. Thank you.
Wonderful, Yashas. I think it was a very, very good webinar, and I'm sure everybody has got lots and lots of insights. So there is a question coming in from Nada asking about a scenario of sales or discount. What happens in such a scenario?
Can I please, I mean, can the question be more elaborative? Because just the sales and discount.
Yeah,
I didn't understand.
Nada, if you can please just probably put in some more details, or you can unmute and you all can, ask.
Yes, please.
So she's saying in point 6.1. Maybe if you can go back to the slides.
Yes. 6.1 is this. Probably with respect to this one. Open receivables, if I'm not wrong.
So she's saying that you have specified all need to have the same price. I believe in 6.1, is that what was mentioned?
That is with respect to inventory, only with respect to cost. This is inventory, not with respect to sales or taxes.
I think, Nada, if you can unmute and you can ask your question, it would be much more clear. Okay, I think the question was answered. Great. So okay, great. So if anybody has any more questions, okay, no worries. So she's saying that her PC doesn't have a mic, and that's the reason she can't put in the question. Okay, no worries.
She can type it if I'm not wrong in the message.
Yes, that's what. Yeah, that's what she has done. That's what I was reading.
Let me check. I'm sorry, I didn't read the question.
Go to the chat.
Yes. What about in a scenario of sales or discount? Okay. First is with respect to sales or discount, this is with respect to AR or AP. Either when a customer, we are giving discounts to the customer, or when a vendor is giving discounts to us. In such scenarios, as I said, we are not going to take product level details from one system to another system. We are only going to consider the total balance, open balance. So when we are going to take it in that way, my product doesn't matter, what discounts did I give doesn't matter, which sales account doesn't matter, because I'm not even posting it to the product at all. So the discounts, the taxes, the products should not be taken from one system to another system invoice wise. But if at all you have a separate ledger for taxes, separate ledger for discounts, that will anyway be part of your trial balance. You don't have to worry about that. And with respect to the other point which you said, you specified all need to have the same price. That is, for example, for the products. Reason being, for example, imagine that I have an entity and I have two warehouses or multiple warehouses, for example. One product is available in all the warehouses. And also, you know that even though I have multiple warehouses, the costing in Odoo is at a company level. It is not at a warehouse level. I mean, you know that there is a new branch concept where I can have at the branch level also. If yes, you can go ahead with that. But if at all you don't have branch concept, or you have the one single company, or even with multi companies, it's at a company level. What I mean is, one single product, even though it is at multiple warehouses, finally the valuation or the cost of the product will be only one. If you see in the product master also, it's not location based costing. So because of which, when the accountant takes the complete valuation of the product, in one place the same product might be at 2,000 value, another place the same product might be of 3,000 value, in another place it might be of 5,000 value. He will consolidate the total value and the total quantity, and they'll divide and arrive at a common cost. So when we go to the new system, this common cost has to be taken up and then split across various locations. From there, based on your FIFO method or based on average costing method, based on the incoming transactions, new transactions, it's going to pick it up. So that's how it's going to work. But from movement from one system to another system, especially in one single company, even though you have multiple locations or multiple warehouses, it has to be one cost. I hope I answered both of your questions. Yeah. Thank you. Thank you, Nada.
Okay, wonderful. So any more questions? Just drop it in the chat box, or you all can just unmute and you can ask. Okay, great. I think there are no more questions. I have one question for you, Yashas. So
please.
You mentioned something about having one suspense account. So do we have one suspense account for everything, or is it like there is a suspense account separately for receivables, for payables, for bank balances? How is it like?
It is suggested to have one so that the complexity is reduced. But if you want to have a separate suspense account for receivables and a separate suspense account for inventory and a separate suspense account for payables, you can take it up, Parva, no problem. But at the same, you have to make sure that the balances of these suspense accounts should be zero the moment you upload everything. That is, you first import the general ledgers with these suspense accounts as a placeholders, and then you import that is basically the receivables, payables, and the inventory separately. So when you do all those imports and you click validate and everything is posted, your suspense account balances should become zero. You either choose one suspense account or multiple suspense accounts. It's up to how well you want to take it up. I mean, how less complex or how well detailed you want to carry forward the data. Both are good. I mean, you can choose one suspense account for less complexity, or if you specifically want individual suspense accounts for each and every type of transaction, that can also be done.
Great. Also, what happens if somebody skips importing opening balances altogether? They just want to start fresh in Odoo. What happens in such a scenario?
As I said, now, for example, I want to start afresh and I don't want to carry my inventory balances at all, or AR at all, or AP at all. On day one, I mean, unless I am starting a fresh enterprise, that is my company's first day on Odoo itself, that's not a problem. But someone who has already run a company or already run an enterprise for so and so years or months or days, I will be completely blindfolded. I'll not know how much is my inventory. I'll not know how much I owe or how much somebody owes me. Or what are all the other balances? What is my bank balance? What is my cash balance? So I'll have zero clue in the new system. So that's the reason opening balances matters. especially for those entities who are already in operations who wants to carry forward the same.
Right. Also, I think just one last one from me. So that is,
Please.
so what would be, according to you, the one major mistake that somebody would really make in this entire process? What is the one thing that can go wrong?
One is, I mean, the common mistakes that we have seen is, in fact, three of them, which I'll highlight. One is the inventory, where they assume that with multiple locations, the cost will be different, and they try, I mean, they would not look into that matter when they're preparing the balances, because of which the balances of inventory, what they prepared and what they uploaded will not be equal. And also, you know that finance entries can be reset to draft and can be done something, that is, we can rectify it later stages. But inventory balances cannot be reset to draft, or cannot be done, I mean, cannot be edited once it is posted. So that is a very, very major problem, because if inventory balances go wrong, we literally have to remove that database and we have to redo it once again. So it's that critical. So that is one. Second is, most importantly, with respect to the invoices and payables, or AR and AP, with respect to foreign currencies, where there, I mean, ideally we suggest it has to be done very carefully, where if at all there are multi-currency concept in that enterprise, and if the balances are also in multi-currencies, carefully we need to post it matching the currency date and also the transaction date. If that is not taken care, again, once I upload everything and validate it, my trial balance will be, I mean, my previous system balance will be showing something. Over here, it will be something else. That is one. And the last one would be, as I said, with respect to not having proper payables and receivables reconciliation. That is, I have a same customer who has an invoice and also a credit note, not reconciled. I mean, duplicate transactions will come into place and all these aspects. So these three, I believe, would be the major challenges or the major errors.
Right, great. Thank you so much for answering them. So I believe nobody has any more questions. So what I'm going to do is I'm going to drop in a link, and you can definitely get in touch with us if at all something crops up in your mind later on, and Yashas will definitely be able to answer. But thank you so much for joining in, and see you all next time with yet another very interesting topic. Thank you so much, and once again, thank you, Yashas.
Thank you, everyone. Have a nice day, guys.